morning. Ira Epstein with your morning flash update for this Thursday, the 4th of February, 2021, 8:15 a.m. I apologize for not being able to do these updates every single morning. We have been swamped, as you can imagine, with all kinds of things with all that's going on in the markets. And I do run a brokerage firm besides putting out all this research. So it does take my time, and there are times when I can't get this done. You know I've done the end of the day videos to wrap up, so I make it up there, but I apologize. So we're getting a little bit of a rally. Okay, tomorrow's the elephant in the room, obviously. The jobless data is going to be very important, but the market's already telling you something. The curve yields are going pretty crazy. So you've got the longer end ratcheting up. You got the shorter end staying where it's at. The market, just like in the energy markets, the market's looking down the road. You can throw all the bear news you want at it. The market's decided that COVID will be in our rear view mirror, whether it's June, whether it's September, whether it's December of next year. It's getting resolved unless there's some variant that comes out of it that these vaccines don't work on. I've just given you the summation. The next thing that the markets have to deal with, the ranges in a lot of the stocks, and I'm talking the stock indices, which impacted then Reddit into the silver market, saying that that market was going to go to the moon and so on. That threw the markets a wacko. That's the way to describe it. You've come back in stock indices. If you subtract the days of all that craziness, you're right back in the range you were. As for the silver, you're about where you were too. So traders are looking at it. Remember, you were over 29, you hit $30 in silver. You've fallen back about $4 in the market. The gold market's back under 1,800. These Reddit people will not make a lot of dent in the futures markets. It's set up different than the stock markets are. We have margin controls that are different. You take these margins up, as some of the firms did in silver, 100%, and they went back down yesterday to the normal margins. You think that doesn't shut off trading? You are sorely mistaken. And they can go beyond that. They can put all kinds of restrictions on. In the stock market, you do it and you're in social media. Look what you've done wrong to all our traders, blah, blah, blah. Different game. Grains are still acting overall pretty good. As I said, bonds and notes, you have to look where you're at. You're going to get higher yields, the 30-year, the 10-year, and the quicker you get to the 5-year, not as much of an impact. Energies, well, you can see you're pushing $60 a barrel in Brent. To me, that looks a little expensive at this point in time. As for the day's data, Challenger came out with planned cuts of 79,000. Last month, they were looking at 77, so pretty close to it. The jobless data came out down 33,000 claims for January 30th. That's double what the market was expected. You can see where you're at there. This is the lowest number since, I think, November, if I'm right. Fourth quarter productivity and unit labor costs, well, down in terms of productivity. That's not a good sign. And labor costs at the same time up about almost 1.5% higher than the market was looking for. Factory orders come out this morning at 9 o'clock. We're going to get the EIA report. We saw the Bank of England. The Bank of England decided to stand pat on what they're doing. They're telling the market to prepare for negative rates. My instincts, all I can tell you is my instincts as I look at what the market is doing here, is that telling the market to prepare is like, hey, maybe I can get the market to do certain things without ever having to do them. Keep that in the back of your mind. I myself don't know if they're going to go negative. They're only at 1/10 of a percentage point. I'm not convinced the bank has decided that there's any benefit to it. And while they're looking for lower growth this year than they originally were, they're now looking for better growth in 2022 and 2023. I don't know what they accomplished. So, interesting time in the marketplace. I want to remind you that one of the things that not only do I do when I come out at 5:40 in the morning with my subscriber video, but if you want to get our Linn Market Research with one of those subscriptions, we throw that in for a lot of our clients. But we'd like you to try it for absolutely free to see what it is. Now, if you're a futures trader, be it the grains, the soft commodities, the meat markets, this is right up your alley. A lot of information in it. I try to cover most of the financials and my subscription information in great detail. But you get all this, you get to see it, you get to see our charts of the day if you want to get on that. It's all involved. These are what our accounts get. A lot of my subscribers get it as well. How do you get it? Just give us a call. 866-973-2077. You can go to our website at www.iraepstein.com. Sign up for our offerings there. I'm Ira. You have a great day. I'll talk to you tomorrow.